You know, I love my price action, and I love to serve. I love to give. So let me know. Give me a thumbs up, 100 likes, and I'll do more of this. Hello nieces, hello nephews. It's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. We don't do predictions. We don't call tops, and we don't call bottoms. We just identify the levels, the setup, so we can trade it unbiasedly in real time, up or down. It don't matter. My target audience are short-term traders, short-term swing traders, but mostly predominantly day traders. Okay, we trade level to level style, up or down. We optimize our trading opportunities here in the sheep's den. Now we're looking at this chart, guys. Unfortunately, I hate to say it, and I'm hoping I'm not right, but we are in the chop phase, and we can tell we are in the chop phase. I mean, we had a beautiful move to the upside. It was incredible after election day. But the last few trading days has been a bit underwhelming, mainly the last two, yesterday and Tuesdays. We have an inside candle setup. We're lingering around the 5 DMA, okay? I mentioned to you guys many times, a lot of times, when the market is above the 5 DMA, it's still overall bullish, okay? And we're lingering around there. I'm thinking we're in the chop phase. The chop range I have is 595 to 599. Let me show you guys why I say 595 to 599. So my 599 level is this yellow line. 595 is this yellow line. And then I have a middle level at 597. So we see multiple times around 595 that we got buying pressure, or bulls are stepping up right around that area. And we see multiple times where we're around that 599 level. We had a false breakout here, and then bears multiple times continue to step up around that 599 level. So you guys can see that with your own eyes, correct? So we see where the buy zone is, and we see where the sell zone is. Or I don't know, whatever. Is this English? Is this English class? So the way I'm looking at this, I am favoring that we are in the chop phase as long as we are within that range. So I can't really give us a direction, and when I can't give you a general lean, I just say that I'm neutral. Right now, Uncle Charles is neutral. Okay, bears will look at it and say, oh, it's the toppy, man, it's toppy. We're going to drop, and bulls will look in and just say, buy the dip. Okay, but I'm not a biased trader. The market can literally go either direction. And I'm not here to give prediction. I'm here to give the setups. So when the market chooses a direction, I and my fellow sheeps will be ready to react unbiasedly. So here's the setups, guys. Here's the setups. Now, so let me explain how to use the levels first. First of all, like yesterday, right? Yesterday was a chop day. For most people, majority of retail traders, they probably didn't make any money. They probably didn't know how to trade this because the market makers were jerks. You know, they didn't give us much of a move. But if you're an experienced sheep style trader, you know how we use the level. So yesterday, the SPY opened above 597. 597 first support with 599 as first resistance. I cover this stuff in my Discord. If you guys need a mentor, extra guidance, extra pair of eyes, a profitable community to be a part of, join the Discord, definitely. But I did right. If SPY is above 597, 599 is next resistance. If it clears, bullish with the higher targets. And I put 597 fails support as support. Then the next support at 595 is in play, okay? So we're just playing at level to level style. So we look at what happened yesterday. We broke down right there, 597, okay? We broke down 597. That's when you want to look to short. And it smashed 595 right there. You guys see it? Level to level style. This is the thing I tell you guys every day for years. Level to level style. The level style approach is a middle finger to the market makers, because when they start putting us in the chop phase like they are, okay, they're looking to trick us out. Number one victims of the chop phase are retail traders. So when I tell you guys to play level to level style, this is how we give our middle fingers to the market makers. Because I swear to God, on this breakdown of 597, they probably wanted us to go short and hold it all the way down like it's a freaking crash coming, like what Ron Walker probably wants you to do. But instead, they bounce it off right at the next pivot level. And I teach you guys level to level. So if you got in on this breakdown and got out right here at level to level or close to it, that's a middle finger to the market makers. They didn't get us. We got them. And then what happened next? What happened next? After we bounced up 595, we recaptured 5 597, and it led to the next level move at 599ish. From there we reject, hit 597. You guys see how we use the levels on the 15 to 30 minute chart? Breakdown, you want to look to short. Okay, breakout, you want to look to long. Okay, false breakouts, false breakdown are the highest probability setups. Okay, one could make a living just trading with the traps, especially in the chop phase, because the chop phase is very trappy. Okay, so you want to look for traps until we break the range of 595 to 599, because I'm thinking once we break the range, if we don't get a false move above 599, I'm thinking we head up higher. We could probably hit that next fib level of 600.5 and possibly even break it. And if we break down 595, I'm thinking we're going to go hit 593, 590 and lower. I wouldn't be surprised if we go drop all the way down to 586, to be honest with you. But for any of that to be possible, we got to break the chop range. And what is the chop range? The sell zone at 599 down to the buy zone at 595 with 597 as the middle pivot level. My lean will come when we break this range. So above 599, I would lean bullish. Below 595, I would lean bearish. Anything in between is neutral. Remember, I'm speaking from a day trader's perspective, level to level style. I'm speaking from a short-term trader's perspective. Okay? So when I say I'm bearish to the next support. And if it hits that support, I'm going to leave a runner, take profit, leave a runner, and see whatever the market gives us. They keep breaking down support level, I'm going to continue to be bearish. Okay? And if they keep bringing up resistance line, I'm continue to be bullish. Okay, I'm just following the price action. But today for SPY, I gave you guys the chop range and I gave you guys the actionable trade ideas. 599 clears. You want to look to long with 600.5 in play first. You want to take most profit there and then leave a runner in case that level breaks. And if that level breaks, we can head up to 602, 604, and so on. And like I said, if we break down 597 and we break down 595, a critical pivot level there, take most profit if we go hit 593 and just leave a runner. If the market wants to give you a bigger move, then your runner will catch it and you'll be more money in your pocket, more green. Okay, no greed, guys. Triple Q, similar situation to yesterday. Okay, I need to see a breakdown 512 and 510. Now yesterday we had a nice breakdown of 512 and it hit 510. Level to level move, great. But if we're talking bigger moves, bigger down move, it needs to break down both levels, especially 510, because we can see with 510, we can see that there was buying pressure not 1 but 2 days in a row. So if we can break it down, that'll tell us that all the buy orders were absorbed and there's nothing stopping Triple Q to drop lower down to 508, 505.5, maybe even lower down to 503.3ish. Okay, but it needs to break down 512 and 510. If we break above, or if we stay above 512, okay, we stay above 512, which is the next fib level, 512, and we clear 514, that is bullish, with 515.2 in play first, I would take most profits there. And then I would leave a runner in case we go hit 517 and 519. And remember, you can take most profit at 515.2, leave a runner, but if your runner continues to go up, you can always add to your runners to go hit those potential higher targets. You can add to winners. All right, Tesla. Yeah, I have support at 328 and the fib level, critical fib level at 326. If Tesla wants to continue its pullback, because it's been pulling back the last couple of days, if it wants to continue its pullback, 326 is the level that must fail to put 322, 320, 317, 315.5 all in play. It has to break down 326, 328, and 326 to be bullish and try to put in a bounce. 330 and 332 must clear to put 333.5, 335, 337, and 340 plus all back in place. Got to clear 330 and 332 to trigger calls. NVDA gave a nice little pullback yesterday. To continue its pullback, it must stay below 147.3 and it must break down 146 and especially 144. Now, if we look a little closely, you can't really see it on the daily chart, but if we go to like maybe a smaller time frame, like a 6-hour chart, 3501, my brother 3501, I know, like one of my Discord members, the guy, he is amazing at spotting these trades, and because of him, I've been stepping up my game as well. And when I mean spine is these M patterns, these W patterns. They play out a lot, especially with NVDA. You can see the M pattern right here, and now it's looking like it's trying to develop another M pattern, guys. So it's just something to look out for. Now this is not guaranteed, okay? It's not guaranteed it's going to be bearish, because this middle part can be a higher low as well. So as sheeps, we want to look to react. We see a potential M pattern, but we also see where the double top is, okay? So we got to be ready to react. If above 147.3, once again, next resistance is at 149 and 150.5. If those levels clear, then no M pattern, okay? No M pattern. M pattern's out of question, and we're going up higher. And this part right here, this low in November 11th, could be a higher low that's going to lead to a higher high. Now, for this to be an M pattern, all right, it needs to stay below 147.3 to start and break down 146 and 144. All right, now around the M pattern, I say around 144, but the low is around 143.4. But I'm gonna target 144, and I believe that if we break down those support level, it's going to get very, 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 very bearish for NVDA. Okay, you guys seen the previous M patterns? I think this is going to be a bigger M pattern if it plays out, okay? But we need to break down 147.3. We need to break down 146 and 144. If those levels go, then you will go, or should go, into shorts. But if we clear 149 and 150.5, no M pattern. We are bullish. IWM looking like it's pullback time as well. It did break down 236 yesterday. However, gapping up. That doesn't mean the breakdown is canceled just yet. This is a daily chart, guys. So at market open, bears need to break down 236 to keep yesterday's breakdown intact. If they do, then they have a shot at more downside and possibly send IWM all the way back down to 232 and 230, possibly 228.6-ish. But it needs to get below 236, guys. Remember how I show you guys with the 15-minute chart how to use these levels? Same thing on IWM, but it needs to break down 236, break down 234 to put 232, 230, and 228.6 all in play. Above 236, then yesterday's breakdown is in jeopardy. It's questionable. And if we get bullish follow through by clearing 238, then we'll likely go to 241 or higher, possibly back up to 243 and 244.6. All right. Apple just consolidating. I'm neutral on Apple right now. It looks more bearish to me than bullish, but I'm overall neutral. Where's the 50? You see, it's testing the 50 as a resistance yesterday, and there was selling pressure, guys. So for today, 227 and 228.4 must clear. Like, bulls need to step up, recapture that 50 DMA, and recapture that Fibonacci level. If it does, then I'll be bullish. Right now, it's looking a little more bearish than bullish because it was selling pressure there. So bears need to show follow through today. Break down 223 and 221.5. Then I will take the rejection from the 50 DMA yesterday. You guys can see it. It was a rejection from the 50 DMA. That orange line is the 50. And for me to take it more serious, it needs to break down 223 and 221.4 today. If it does, that is very bearish price action. Amazon, not bearish price action, very bullish. Shout out to my Discord member, Alyssa. Again, I wasn't even going to look at Amazon yesterday. She made me cover it, and I'm so glad she did because this was a beautiful move. We talked about longing above 210.5, hitting 212 and above 212. I think I said I had 215, and we smashed 215. So very happy about that. Right now, we're above 215. So as long as above 215, 216.5, 218, and 220 are targets, with 220 being the next critical fib level. All right. If we break down 215, 213.5 and 212 are back in play, with 210.5, 209 and 207 as targets. Okay. Meta is playing around. I guess I need to see it break down 580 and 577.6 to favor a deeper pullback, like a bigger pullback back down to the 560s, mid to low 560s. But the bulls aren't stepping up either, okay? For me to trust the bounce off this support, staying above 580 is a start, but it needs to clear 582 It needs to clear 584 and 586 to put a possible another test of 600 back in play. Okay, above, above 590, I would probably be a little more bullish on Meta, but right now it's struggling. We'll see what it wants to do. Microsoft needs to clear 426 and 428 for me to be bullish. Okay, rejected from that fib level yesterday. But if bears are going to step up, then they need to break down 424 and 422 today. If they do, 420 and 418.7 are all in play with 417 below. All right, now let's get into some crypto. Yeah, Doge is consolidating. It was a beautiful move to the upside, made lots of money. I would not ignore crypto, guys. I'm bringing back crypto for a reason. Trump is president. I'm not trying to make this political. I'm here to make some money. But, the markets seem to like that Trump is president. So, if that's the case, whether you like him or not, I know we all like to make some money and be able to pay our bills. So, let's focus on that. So, what do I have for Doge? Well, right now we have a triple inside candle setup. It's not a triple, a double inside candle setup. It's not an official one, but we have this candle right here, November 12th, with November 13th within the range. And then today's candle, it's not closed. We didn't get a close yet, but it's still getting tighter is what it looks like. So as always, when we have a range, we need to identify that range. Right now I have 35 cents to 43 cents, 43.4 cents. Let's say 44 cents, all right? 35 cents to 44 cents is the chop range for Doge. Let's say it one more time. 35 cents to 44 cents is the chop range for Doge. Anything in between is consolidation. If you're like holding shares right now, betting to the upside, I would just keep holding my shares as long as above 35 cents, okay? You might lose a couple. I'm assuming you got a good entry. Like if you got a good entry down here, guys, you can afford to hold your position, okay, as long as above 35 cents. But if it does drop below 35 cents, I would just cut my position and reposition for the next setup, okay? But overall, the chop range is 35 cents to 44 cents. I'm favoring the next leg will come when we break that range. All right, so above 44 cents, I'm thinking we're going to get to 50 plus cents. I know a lot of yous would love that, okay? And if we break down 35 cents, hey, you can take profit on whatever money you make. I think you can make money on shorts. But even if it breaks down, it might give us another buying opportunity. So, but either way, below 35 would be bearish, and I would cut my longs if 35 cents fail because it might drop lower. Okay, it depends on how you want to trade it. It's up to you, but that's my approach. Okay, let's take a look at Mara. Some profit taking yesterday. I have the support level, fib support level at 22. We're above that right now. So bulls really need to step up right now. They need to keep price above 22. The RSI was a bit hot yesterday, cooled it down. So if they can stay above 22 and recapture 24, definitely more upside is possible with 26 and 27.3 in play. Now, if they want more pullback, getting below 22, we'll put 20, 18.5, and 17 all back in play. Actually, there's a gap all the way down at 16.2ish. So that's definitely a possibility as well. But it's got to break down 20, 22, and 20. And then pullback can continue. What's that other one I covered? Riot? Ty, I hope you're watching because you told me to cover these. I'm doing this for you, man. Yeah, Riot. I don't have my fib levels for Riot. I could have sworn I did this yesterday and I saved it. But yeah, I gotta get the coordinates right. This is 1309 for that pivot high that I'm using. That's from July 17th pivot high. And then I'm looking at September 6th pivot low. This is at 636. And there you go. Right? Yesterday, profit taking yesterday. We lost this support level at 13. That is now resistance. So as long as below 13, Riot has a chance for more upside with 11.6, 10.5, and 9.7 gap. That's the gap fill as targets. Okay. Now to trust a bounce, I need to see 13 recapture. If we can recapture 13, 14.6, 15.6, and 16.5 would all be back in play. You guys want to see Bitcoin? You guys want to see Bitcoin? Let's take a look at Bitcoin. What's Bitcoin doing? It's almost at 100K, guys. Goodness gracious. is my macro level. So if we're just looking at the macro level, not the micro, if you guys want me to cover the micro levels of Bitcoin, get Uncle Charles' video to 100 likes. If I get 100 likes, I'll do a lot more work with crypto. I'll do a lot more work for Bitcoin. But I'll just give you guys the macro level. And the macro level I have is at 89.4K. 89,452 to be exact. As long as above that, 89.4K, Bitcoin definitely have room for more upside with the next macro level target at 95.7K, 100K, and then 102K above that. I wouldn't favor a pullback unless 89.4K and 87.4K fails as support. If you guys want more content like this, give this video a thumbs up. I'd love to cover more crypto for you guys. You know, I love my price action, and I love to serve. I love to give. So let me know. Give me a thumbs up, 100 likes, and I'll do more of this. Otherwise, I'll go back to the regularly scheduled program. Okay, depends on what you guys want me to do. You guys know I'm looking for work, and I ain't afraid of working. All right, love you guys. Shout out to the middle class. Peace.